Good morning, ladies and gentlemen. My name is Cele Moncayo. I'm a managing director at Poyry Capital, and I help lead the packaging M&A work at my company. During the next 10 minutes, we're going to look at packaging as an asset class and why investors should look as packaging as a good way of making money. So when we talk to the private equity financial community, more often than not, we get the following question. Why should we invest in companies or a sector where there are a limited number of raw material suppliers and my customer base is rapidly consolidating? And that's the reason for the title of that slide, basically between a rock and a hard place. In the left hand, you'll see the raw material suppliers. And in this particular case, you can compare the resin suppliers for the rigid plastic and flexible plastic market is a very consolidated space. On the right hand, on the other side, on the customer side, you'll see some of the few consumer staple players that are in this particular market. In this case, you can see an example, the mega brewer AB InBev, where in the next few years you'll have 20% of the overall packaging market in Europe. So why invest in packaging? And some of the answers that we have given is first, it's a way of owning a consumer staple-like company without having to pay a consumer staple-like multiple. Basically, you're buying exposure to companies that have limited cyclicality and have growing earnings. Second, packaging companies have become an essential element of the product position to consumers. And they're gaining exposure, you're basically gaining exposure to the advertising industry as well as to the product development industry. Thirdly, even though packaging companies are in the middle, they develop a level of mutual interdependency between the suppliers and customers. Packaging is and will continue to be an important part of the consumer value chain. Packaging companies, and the last reason we say, packaging companies have also an important element of service that goes from design to the product to also to the logistic management. Those are basically four of the key reasons why we say people should invest, in particular the financial sponsor community should invest in packaging. So if we go then to the public, first we're going to go into the public capital markets and see if packaging has been a good investment for public investors. First, if you have a quick view in the performance of the public listed packaging companies, in general, you'll see that the level of performance has been approximately 100% in the last 3 years. This level of outperformance is substantially higher than most indexes in the European equity capital markets. However, more importantly, this level of outperformance is not similar to all packaging grades. If you look at rigid plastic packaging as well as flexible plastic packaging, they have really outperformed the market as a whole. Also, if you look at metal and glass packaging, you'll see that the level of outperformance has actually not been there. It's been a much more civilized level of performance. So what's the lesson? I think when you invest in the public markets and you invest in packaging, you have to distinguish between the different growth rates and margins expectations that different substrates actually have in the packaging space, and also the underlying trends. So the next page, if you want to look at the packaging companies based on a relative valuation basis, and on this case, we have used the enterprise value over last 12 months EBITDA, we can derive the following 4 key messages. First, in the last 3 years, entry valuations for packaging companies have expanded by approximately 2x's, or 2 times EV/EBITDA. There's still a substantial discount between entry valuation multiples there's still a substantial discount for packaging companies compared to consumer staple companies. The consumer staple companies is the line at the top, which is trading almost at 16, 18 times, and packaging companies are really trading between 8 to 10 times. Another lesson is that entry valuation multiples are almost at all-time highs, more or less at 9 times EV/EBITDA. And also, I think the last message here is that the relative valuation for container board companies appear particularly high when you compare their margins as well as their growth expectations. In general, our conclusion from a public market point of view is that there might be some room to go for packaging companies regarding valuation, but it will be very difficult to replicate the sort of performance in the packaging in the public packaging space that these companies have actually seen during the last 3 years. It will be very difficult to see them increasing again by 250% per annum. That was the public market view. Now we're going to go to the financial sponsor or private equity perspective. And I think in this case, we have highlighted 3 investments for financial sponsors that have been very good investments and achieved very good returns for these financial sponsors. The first one, and then we're going to talk a bit about what the financial sponsors also did to achieve those levels of returns. The first one was the acquisition of Nordenia by Oaktree Capital Management. It was one of the first investments that Oaktree Capital Management actually did in Europe, and it produced a fantastic return for the fund. Apart from investment in the management, they put a new management team in place, or helped by putting a new chairman in place in this case. They also sold those assets that were basically non-core for Nordenia. We calculated the IRR for this particular investment for Oaktree in the 30+ range. The second case is the acquisition of Constantia Group by One Equity Partners. Here, One Equity achieved a magnificent return on their investment by basically separating the company into 3 unique parts. First, they did the IPO of AMAC, an Austrian rolling mill aluminum company. That was the easy part. Then second, they improved the operations of Duropack, which basically got sold then to DS Smith around 7.5 times or 7.7 times. And then third, with Constantia Flexible, they went through a very aggressive acquisition, emerging market acquisition path, and also opened a third leg for the business, in this case, labels. We calculated that the IRR for One Equity in this investment was above 70% as well. And lastly, but in a much smaller scale, was the acquisition of Platinum Equity of Nampak Cartons. Nampak Cartons was a UK-based company. It was an orphan asset owned by Nampak, a South African-based packaging company. And Platinum was clever enough to separate the business into 2 different carton-based companies, one for food and one for medical. And basically, they sold it to the best buyer for each particular type of sector. Graphic Packaging bought the company for around 6.8 times, and Essentra bought the pharma carton packaging for around 8.6 times. I think the IRR for Platinum Equity was calculated also above 70% on that particular investment. I've highlighted only 3 examples of how people have made a lot of money in the private equity community. Also, actually, most of them based in Europe, in the packaging sector. Well, there's a lot more. Clearly, not everything is rosy. There's also risks in investing in this type of activities. And I'm going to highlight not all 5 of them, but I'm going to highlight just 3. Sometimes there's insourcing of packaging, where the consumer takes the packaging activities and starts producing the packaging product themselves. An example could be when water companies in the UK, or carbonated soft drink companies as well, start manufacturing their PET bottles and PET preforms at site, and then eliminating the need for a converter. Clearly, some investments in those PET preform companies have been very bad investments for the financial sponsors that have acquired those companies. There's clearly regulatory risk. I think Jari, David spoke a bit about regulatory risk. One example, again, is in the PET space. In certain markets in Europe, you have returnable PET for the carbonated soft drink bottle. That market, if it's not subsidized, might actually not be there in the future. Another key risk, regulatory risk, is the sort of exposure that mineral oil might have or with actually food. And I think the last one I'm going to talk about is culture shock. In the last few years, particularly North American companies have been very aggressive in Europe, acquiring companies with operations particularly in Eastern Europe and in some cases in Poland. And we've seen 3 cases, Printback,
Meet Westvaco, or now WestRock, as well as Constar actually having to exit Europe because they could not fit with the culture between North America and Eastern Europe in particular in this case. So what's next? What do we see as future M&A trends in packaging, and where can you actually make some money? Because I guess at the end of the day, the financial sponsor community here is also not only wants to know about packaging, they also want to know how they're going to make some money in the future. So first, we will continue to see more consolidation in packaging, particularly in containerboard, carton, rigid and flexible packaging. So those sort of companies should be part of your target list. Then the next three key developments basically are under two big categories. One is following your client, and the other one is looking for venues of growth. Point number two there, European companies entering emerging markets. We have seen two key examples, basically Huhtamäki as well as Constancia going very aggressively into emerging markets. Point number three, European companies entering the US. I think we've seen a lot of examples as well. One example in case is Murphy Kappa actually entering the US containerboard market. And point number four, you will also see US companies following their customers, in this case, Kellogg's, some of the big brewers, Heineken, Coors, with North American packaging companies coming into Europe to better serve their customers. In this case, you have Graphic Packaging, for example, buying A&R Carton as well as Contego. When we see Asian companies buying packaging companies in Europe, we do not see them because they do not come here to become converters. They come here to acquire technologies. And so far, we have not seen a big push by Asian companies trying to buy private packaging companies in Europe. But an example in case is Nisha Printing that bought recently the AR metallizing business of SIG, where they basically enter a new technology that they did not have in this case, Japan. On multiples, I think we will continue to see very high multiples in the sector. Clearly, this is partly a function of debt financing availability. Point number 7, you will also see new entrants entering the packaging market, so more competition for the financial sponsor community. And you're seeing companies from adjacent industrial industries like Nipro, for example, like Jabil, acquiring companies like Nipro, which were in the injection molding space in the United States. And point number 8, you'll see more and more paper companies repositioning themselves as packaging companies. A good example is Metsä Board, where through a period of 5 years, they basically sold all their paper operations or converted them into folding boxboard, basically operations in Europe. So as a conclusion, we can say the following. We will see more M&A activity in packaging. I think the pace will continue. Strategics will continue to be more aggressive, so pushing up multiples. And we will clearly see more private equity companies going into the packaging space. Thank you.